Good morning, everyone. As far as I know, last evening you didn't have good luck because of the weather. I think that this is the best season to stay in Madrid, but many times, fortunately, we have rainy days and windy days, and it's a good opportunity to walk around, to go for doing shopping or other things. But nevertheless, welcome to Madrid. It's a great honor for us. On behalf of my Spanish colleagues, I'd like to thank you for choosing Madrid to celebrate this 18th conference, Insurance Europe conference. I think it's very, very important for the industry to have the opportunity to talk together about the issues that we are facing and how we can improve the underinsured situation. It's a great honor for me participating in this edition. I'd like to thank, first of all, the organizers who had the courtesy to invite me, particularly Andreas, my friend Andreas Brandstetter, who I wish to congratulate for being recently appointed as chairman of Insurance Europe, and Sergio Balbinot, my other friend, for his work and efforts during the last 7 years, having the helm of the European insurance industry. Thank you very much, Sergio. I also like to express my appreciation to the Spanish organizers, Pilar and Mirenchu from UNESPA. As Andreas and Mr. Val have already stated, the topics that we are addressing today at this conference are particularly fascinating. I want to do my best to convey MAPFRE's vision to you, as well our proposals that the insurance industry can develop to rise the challenges facing all of us. Insurance clearly has a threefold role in economic development. The first of these involves protecting against risk. The second, related to our role as a financial saving and investment managers, thereby stimulating the creation of capital in the economy. And the last, but not least, as country financiers through our investments in public debt. As such, stimulating the development of the insurance industry by reducing insurance gaps entails not only increasing the scope of this activity, but also amplifying the intensity with which insurance contributes to the generation of wealth in society. For a multinational group such as MAPFRE, the problem of the system of insurance gaps has a global dimensions, touching on not only the potential development of our business in the insurance industry, in the different markets where we operate, but also on the possibility of our activity influencing positively in the raising of levels of well-being and prosperity in this country. Echoing what Andreas said earlier, the insurance protection gap is the difference between insurance coverage that is economically necessary and beneficial for society and the amount of coverage effectively purchased. Determining this gap not only allows us to identify the degree to which society is underinsured, but also help us to estimate the total potential insurance market that could be achieved if this gap didn't exist. According to 2016 figures, we can estimate the insurance gaps in emerging markets at around $1.4 trillion, which is nearly 30% of the current global insurance market. Global insurance penetration levels have undoubtedly risen over the last few years. Thanks to this process, the insurance gap in emerging markets has gone down by 17% over the last 25 years, notably so in the non-life market segment at 23%, compared with the figures for the life segment of only 13%. More than that, with the sole exception of Africa. Unfortunately, the world has reduced insurance gap across all emerging regions. Under insurance is both emerging and developed markets, and it continues to be prominent in terms of protection against nature-related risk. And 2017, as Andreas said, was a perfect example of this lack of insurance coverage. There was a series of cat events of such historic scale and extraordinary intensity last year in the Americas, where MAPFRE has a strong business presence. Most countries in the continent were affected by the hurricanes, Harvey, Irma, Maria, the earthquakes that shook Mexico, too, and the big South American floods in Peru, Ecuador, and Chile, mainly. The accumulated economic losses caused by these natural events, as Andreas said, have exceeded $300 billion. For our insurance group alone, these events entailed a commitment of over 1.3 billion euros in payments to our clients in the affected countries. However, even though the insurance industry has always honored its obligation to its clients, the levels of insurance remain low, leaving a significant part of the affected population with no possible economic compensation, with no recovery to help them overcome the emergency, and generating additional pressure on public budgets in an attempt to restore damaged infrastructure and, in doing so, reactivate economic growth. The magnitude of these events underscores the importance of reducing the insurance gap. That implies a broad effort which not only requires the active participation of the insurance industry, but also the public sector in drafting and implementing public policies that would raise the penetration of insurance and, in so doing so, reduce the coverage gap. Fortunately, there are mechanisms in place, such as, for example, in Spain, the Insurance Compensation Consortium, which is an excellent benchmark for international best practices in public-private partnerships. I invite you to know better how Consortio is working, because it's an excellent tool with a good collaboration between private insurers and the Spanish government. Move on to talk about life and pensions. The insurance gap in life insurance is also disconcerting. While Europe has an elevated level of general insurance coverage, the 2016 data for Latin America, for instance, revealed that this gap equated to nearly $150 billion. In other words, Almost 75% of the total gap is to be concentrated in these markets. Moreover, developing the life-saving insurance segment and implementing further public policies have proven to be complementary for running pension systems through products specifically designated for long-term saving to supplement private income during retirement. Its importance in this field is underlined by demographic changes and increases in life expectancy rates. As a mechanism for protection and compensation, insurance is also a social inclusion tool, particularly for lower-income families, where the lack of coverage against a loss could hamper future development for generations. Without insurance protection, a relevant loss could result in the medium term in the loss of income for a family, depletion of assets and funds, inability to access credit, the deterioration of family prosperity and well-being, and ultimately increased social exclusion. Here too there is also significant work to be done by the industry, but we should do it hand in hand with the public policy that drives. Suffice to say that the market in Latin America would clearly benefit immensely from a strategy of financial inclusion in insurance, since only out of only one of five countries, only 20% of the countries has a public policy framework in place to develop microinsurance, another instrument to help these countries to develop the insurance, mainly between the less favorable people. And this microinsurance in Latin America represents only 1% of the total premiums in the region. Now I'd like to talk about regulation, as I totally agree with Andreas about his definition of the current regulation in the world, but mainly in Europe. I believe that it's almost mandatory to stop here and share a brief reflections on insurance regulation. The main component of our activities that, as I mentioned earlier, requires us as an insurance company to make a considerable effort in economic and personal terms so as to ensure proper compliance. First, reflection. As Andrea said, more regulation doesn't automatically mean better regulation. Rules that are carefully crafted can protect consumers and the economy. However, they could worsen things if they are not. Secondly, it's essential that we cooperate in a constructive way and dialogue with regulators so that common sense prevails, and so that the situation on the insurance industry, which plays a major role in the economy in terms of compliance, improves over time. And a third idea, or a third reflection to share with you at MAPFRE, we believe that regulation should not condition technical rigor, market practices, and the economic reality of our activity to have unsensible deadlines. These three reflections, and especially the third one, are key when addressing projects of a global nature. For example, the Kuala Lumpur Agreement on Prudential Regulation, which will allow a landing, soft landing, and adequate time to design a global standard of capital for at least the next 6 years. Something similar we expect to happen with other global projects critical to our activity, such as, for instance, IFRS 17. In our opinion, it's essential to carry out adequate impact tests and have enough time to include the lessons learned from these tests before to implement IFRS 17. Overall, we think that the global development in financial regulations, whether accounting, reporting, or prudential, must go hand in hand in light of the intrinsic links between the regulated subjects and their direct impacts on the role that insurance companies have in the economy. Finally, I would like to address the matter of innovation. I think it's a great opportunity to manage innovation to overcome the current underinsured situation in the world. How innovation can help insurance, governments, and society to improve the situation. Digitalization is driving transformation in multiple fields of the insurance industry. All of us are involved on this process. They can be briefly summarized into a single transformation. The central role that new technologies give consumers in managing their relationship with companies, providing services to them. And one of the largest advantages of innovation is the capacity to destroy barriers to entry to the insurance products and services and to help people to have access to these products. New technologies can reduce the costs of our products and services, and therefore make them more accessible to our customers, because we can personalize our products, our conditions. We can tailor-make our products for each individual customer. One size fits all doesn't work anymore in the digital era. In this sense, innovation can become a very powerful tool for financial inclusion in coming years. I'd like to wrap up my time by congratulating again Insurance Europe and UNESPA for organizing this conference. Many thanks for listening, and I hope you have, along the day today and tomorrow, very productive debates, and they can help us to improve our development, the increase of penetration of the insurance, and at last, the possibility to increase the well-being of the people in Europe. Thank you very much, and have a good day.